Hello and welcome to the Focus Compounding Podcast. How's everybody doing out there? Hope it's going well. I'm sitting alongside my partner, Mr. Jeff. Jeff, how are you doing?
I'm doing good, Andrew.
What's your last name again?
My name is Gannon.
Gannon, all right. Mr. Jeff Gannon. My name is Andrew Kuhn. Thank you, everybody, for tuning in. We really appreciate it. If you're listening to this on the website or on Jeff's blog, or if you're listening to it on iTunes, we really thank everybody for tuning in with us. So today we're going to be doing an investing topic sort of episode, and it's going to be on spinoffs.
Yep.
And, we're just going to sort of give our general ideas on it. Every now and then we want to cycle through just topics and questions and that people ask of us, and then investing ideas, of course. And for this one, we're going to be going over topic, and that is, like I said, it is spinoffs. So when did you first come across spinoffs?
The first time I remember really coming across spinoffs as an idea is you can be a stock market genius.
So that's actually the first time I did too.
Yeah. I mean, I may have come across spinoffs as in seeing them happen, but as an idea of as a particular type of investment to make,
Yeah. And what was it that attracted you to them? Was it the book themselves?
Yeah, the book
and
was
how
that way.
Yeah, I mean, pretty much when Joel Greenblatt wrote that book, his fund, Gotham Funds, back in, was it the 80s? Is when he
through the 90s. It may have started in 89 or
was
something.
pretty much all. I mean, they were pretty much a special situation fund, right? That's all they did was arbitrage or spinoffs. And
different kinds. In that book, he mentions recapitalization, spinoffs. He did Leaps. So Leaps is sort of creating a special situation, I guess, in terms of the leverage there.
Yeah.
Yeah. But no, it wasn't straight stock picking of things where there was no event happening. Yeah.
Uh-huh. And why I like spinoffs, I think, because there's not a lot of bias because there's no current market price for it. So I feel like you could really come and do your own work and then come to your conclusion without having to worry about it's actually trading at $50 and this appraisal price is way off or whatever, all the biases that we can sometimes fall into with a already public company.
Yeah, that's my favorite part about it is doing it before the spinoff, not knowing exactly how the market will value the different pieces.
Yeah. Do you think that spinoffs are a good place for people to start? I mean, I think Charlie Munger, when they asked him where would he start if he was or getting into investing, I think one of the things he said was spinoffs.
Yeah, I think microcaps and spinoffs.
Yeah.
Microcaps in the sense of very illiquid. I think stocks that are very illiquid and stocks that have been spun off are two of the most attractive areas to look.
Why is that?
Because I've just seen how some investors don't pay attention to them. They drop them. They just don't treat them the same as other stocks. Not that you should invest blindly in all spinoffs. I'm not saying that. And in fact, I have two stocks in the top three stocks that I own that were spinoffs. That's how I bought them. In both cases, though, the other piece of the company has not performed well. So the piece that I bought performed well. The piece I did not buy, the piece I sold off, did not do well. So I own BWX Technologies, and the other part of that, Babcock and Wilcox Enterprises, has not performed well, and I sold that off after holding it for a little while after the spinoff, though. And NACCO, if you look at NACCO, which is actually the remaining part of the company, versus Hamilton Beach Brands, at least as of this recording, NACCO's, up 25 or 30%, and Hamilton Beach is probably down 25% or so. So, I mean, that's a big difference when you think about the relative performance.
Sure. Do you think spinoffs are good? Because historically, there's been a lot of studies done, right, that have shown that historically, like if you bought a basket of spinoffs, it's actually outperformed the market.
Sure. So
I think by in the book, he talked about it a little bit.
Yeah, I think since then it hasn't performed as well.
Imagine that, right?
And I think that in some other countries, sometimes it hasn't performed as well. I think there are two things about spinoffs that are reasons why they work out well. One is it tends to have you focus on the company that is has some sense of shareholder value. Because why are they doing the spinoff?
To create value.
Right.
Sure.
Like a lot of companies could just keep the businesses together. There's a spinoff happening. There could be other reasons why they do it, but there's a greater chance that there's something about shareholder value, that there's some concern about capital allocation, there's some concern about the stock price. Okay. The other part of it is generally a company will spin off only because they can't sell it. I mean, there's some who want to avoid taxes and who are there's some capital allocators who are really good and may do really complicated deals and things. But the average company would rather sell something than spin it off. Mm-hmm. And so often they'll have actually...
Just because it's easier, cleaner, you think, or what?
I think also they get credit for it and they get to keep it.
Yeah.
So if you spin it off, it could be going with another management there, and it's no longer part of your company.
Sure.
If you sell it, you get something for it that you then get to invest in your little fiefdom, right? I think that is part of it. So I think that, I think people, like management tends not to get enough credit for spinoffs. Some people do, where people go back and track how the spinoffs did and everything, and realize that it's actually a pretty good record. But there's plenty where I think that in general that's not going to get you on the cover of magazines is spinning things off now.
Where do you typically first hear about spinoffs? Like, how did you come across NACO, which is a spinoff situation?
That was a Clark Street Value blog. Yeah. So that was a blog.
So do you come across the situations by just kind of reading around, or do you have a specific place that you kind of go to? Or I think because I go to, I think the website's called Spinoff Monitor. I think one of those or something like that. There's a list of like all the upcoming spinoffs and stuff that you could read about.
Yeah. So I guess like even when I said that's where I found NACO, that's not really true. I knew that NACO was supposed to spin. Actually, I'd known that NACO was supposed to break up the company many years ago.
So you knew about NACO. So you knew about NACO prior to the spinoff,
right? But I hadn't analyzed it carefully with the idea of owning the coal company.
Yeah.
But when I read that blog post, that's what I decided, that was really interesting. I had known about it a little bit because they had spun off another company previously. So I had actually researched that company, not trying to research NACO, but researching the materials handling company that they had spun off before. And actually, maybe around the time of the financial crisis, they had thought about spinning off Hamilton Beach before.
Yeah.
So I guess I had known about it then, too. But there's all sorts. You just read so much investing news and so many things about they might spin something off. There's a lot of things that never turn out to actually happen.
Sure. What do you look for, I guess, in a spinoff situation? Like, what do you like to see?
Simple business with a moat is what I want.
Yeah.
I want something that I can understand, that I can appraise.
So you pretty much you approach it the same way you approach every single stock. Do you think?
Much.
Yeah. I mean, you look.
And I think that's part of like when I talk about BWX Technologies.
Yeah.
People look at it today and think that I bought like a quality company at like a good price and everything, and that's not how it happened. I bought it as part of a spinoff at like a value price. And so you're not going to get the results that I got in that stock by just going out and looking for a high quality stock and buying it today.
Did you buy it the day of the spinoff?
I bought it before.
So pre-spin.
Yeah. I became convinced that management was really going to do stuff, that they were serious about breaking up the company or creating value that way. I wasn't 100% sure the spinoff would happen at the time that I invested. There was also a money-losing division that they hadn't closed down yet, but I figured they were going to. And I just liked the price at what it was at. I was concerned it might run up before the spinoff. It didn't. So I was.
Do you remember what price you bought it at?
20 something. I don't remember the exact price.
What's it currently trading at?
Between 60 and 64.
Yeah,
something like that. But that's only the half.
Yeah, sure.
Right. The other half is I forget.
Have you invested in many spinoffs, or was that the first one?
Was that the first one that I invested in? I don't know about that. That's a good question. I think that Babcock was the first that I remember putting a lot of money into a spinoff in terms of liking the quality of the company. I'm trying to think if I ever invested in a spinoff sort of more as a special situation. That's the other thing that's attractive about it is that sometimes, like NACO is a good example of this, a lot of investors, even value investors, are interested in it for a different reason than you are.
Sure.
A lot of people were interested in NACO as a special situation, buy ahead of time or buy the spinoff or sell it pretty quickly.
Yeah.
I was interested in it as sort of a way to own a stock that I would otherwise like to own anyway at a price that I feel like I wouldn't get unless there was a spinoff.
Yeah.
Which is sort of the deal with BWX Technologies. But, we looked at Cars.com, which is a spinoff, and it was a spin of a spin, sort of. So what had happened was the old Gannett had spun off its TV and other assets from its newspaper part of the business.
Yep.
And then that had subsequently spun off this website.
Mm-hmm.
And so you have a lot of change in the business, and you can see something that was there from the beginning, and that some investors may have bought it. And I don't know how they did in that case. May have bought it when you do like a sum of the parts.
Mm-hmm.
But it gives you a chance to look at a business that is now simple business that you can now value on its own that way.
Yeah. And it's pretty interesting because obviously, like we talked about, spinoffs happen to create value.
Mm-hmm.
So, I mean, I think in that regard, you have a little bit of a tailwind kind of working for you in that regard. I mean, in most situations, if the spinoff is, I mean, what we like, the management's sort of incentivized to make the outcome be favorable. So I guess you also have that working for you too.
Yeah, it can be focused on something, I think.
Yeah.
In the example of Cars.com, that's an interesting one because their former customers had been their shareholders, basically.
Mm-hmm.
So if you go back before Gannett was basically owned them, there were a bunch of different newspaper companies that all had shares in it. And they still have had agreements with those old companies, which are obviously unfavorable compared to what they're going to be in the future.
Mm-hmm.
So another one that sort of reminds me of, which is a spinoff, is Seritage, which is a spinoff from Sears. And actually, it's a REIT that actually Warren Buffett owns personally. And that has deals with Sears at below market leases. So they're renting out space to Sears at well below the market value. And as Sears vacates that, they rent it out to new tenants at often several times the rate that they were getting from Sears. So you have those sorts of changes where like
interesting.
It can't report high earnings yet, but it will in the future because there's change. And you saw that with Cars.com. The new agreements that they strike will be better than the old ones because they were sort of captive to their customers.
Didn't a big firm, a fund, Starboard, is that what their firm's called? Recently took an activist position in them as well, right?
There's an activist in Cars, yeah.
Yeah. That's pretty interesting. Have you been looking at any spinoffs recently?
Have I been looking at any spinoffs recently?
KAR?
Yes.
Yeah.
So, but we don't know. That could.
We don't know the conclusion of it.
And all they said is that it'll happen within a year.
Yeah.
Is the plan. And so that's what you get with spinoffs. Is a lot of times you get something like that.
So So when you first hear about a spinoff like that happening, for the viewers to sort of learn, what do you do? Like, what did you do in this situation?
Well, that one is like mark it down to follow it. Yeah. Because it's a competitor of Copart.
Which is a business we both love or like. Yeah.
Yeah. And I'd actually researched this company before as a peer of Copart. It has two sorts of businesses, and the part they're spinning off is the one I'm more interested in. But they're both okay. The part that they're spinning off is the one I'm more interested in, and it has big market share similar to. It's basically it's sort of a duopoly.
Yeah,
yeah, and so that'll be interesting, and it's wide moat when they do that. There's also, I guess, should we talk about things that aren't spinoffs that are similar to it? I was thinking that in many ways, Hostess Brands is like a spinoff that way.
Sure,
because I'm thinking in terms of. To get across to people that it's not the idea that it's just a spin-off. That's the reason why you buy it. Like, what you really need to do is you need to read the book.
Sure.
You can be a stock market genius.
Yeah. Mm-hmm.
So if you're listening to this, you need to go read that book.
Yeah.
Because all the things that he invested in all have the same sort of characteristics as a spin-off.
Sure.
It can be restructurings. It can be all sorts of different things. And so I think that a company, like a private company going public by buying into a public company, has a lot of the same features as a spinoff. There's no IPO.
Yeah.
It's a new company being exposed to the market without an IPO.
Yep.
It's like why you don't buy into an IPO. A spinoff is the opposite of that. Why you look at a spinoff is because it's in every way the opposite of an IPO.
Sure. Yeah. And do you think that, I mean, and he kind of talks about this in this book, he thinks that spinoffs have higher returns because there's not, or more opportunities for mispricings because a lot of big funds, for example, can't really play in that pond. Do you think that's sort of the case?
Yeah, he was interested in ones that are like a really big company spinning off a really small company.
Yeah.
Which is interesting.
I mean, look at NACCO. I mean, what's the market cap of that company?
Right.
I mean,
NACCO's market cap is 200 some million, and when I bought it, it was lower than that. Actually, Hamilton Beach Brands has been valued higher than NACCO.
Mm-hmm.
It has probably market cap even now of 300 some million, and it also has debt, whereas NACCO has net cash.
Yeah.
So on an enterprise value basis, it's well under 200 million, and the liquidity seems to be drying up with NACCO.
Mm-hmm.
I've listened to the earnings calls. I think the last earnings call there was one analyst on it.
Yeah.
And they just kept taking one question after another from that analyst. The one before that was similar that way. It has a lot of the features of a really ignored stock now.
Yeah.
And I think it will take a really long time for people to...
Do you like that?
Yeah.
Yeah.
Yeah. I mean, I'm fine with that. I don't mind if a stock's very illiquid. I don't mind if I feel that people don't understand it well. Does it move weirdly, the stock price, day to day? Yeah. It has pretty big moves. It'll often move 4% one way or the other for no reason day to day. It doesn't move as much with the market. I think that that's stuff that is more true now than when it was part of the same company as Hamilton Beach.
Mm-hmm.
Yeah. And I think that it's, and some people may not like that. I think it's probably going to become a more illiquid stock over time.
Yeah.
Yeah.
Do you think that, and he sort of wrote about it too in his book, that sometimes the best opportunities for spinoffs are after the first year, because a lot of people, either they see this new stock in their portfolio and they're just like, I don't know what that is, and they sell out of it or whatever. Do you believe that to be true?
I don't know. It's interesting. With NACCO, for instance, it would have been better to buy it ahead of time. I guess the smartest thing you could have done is buy it well ahead of time, and then sell off Hamilton Beach.
Hindsight's always 20/20, isn't it?
It split.
Yeah.
But that's an interesting one because the two businesses had nothing to do with each other.
Mm-hmm.
They're completely different.
Yeah.
So that sort of thing is really attractive that way. I have seen some spinoffs that are, and the Sears one that I mentioned falls into this category, that are a little iffy in that they might be spinning off something that's financially questionable.
Uh-huh.
The Sears one's the reverse. Sears is the company that is more financially questionable than what they spun off.
Yeah.
But that is a thing that I've seen a couple times that you do want to be careful about, especially when they load the company up with debt.
Yeah.
So when NACCO spun
or get
off,
a parting gift or something. I mean, it's so interesting in spin-off situations. Yeah.
Yeah. So Cars was loaded up with debt, right? Cars.com was, they
gave a parting gift to Tegna, right?
Yeah.
It was over $1.5 billion or something like that.
Something like that?
I remember it was a lot of money.
Yeah. So they basically, that's sort of a way of getting a dividend out of it.
Yeah.
I remember, I had bought Hanes Brands.
Okay.
So you asked if I had bought a spinoff before.
Yeah.
In 2006 or something, I bought Hanes Brands. And that was a spinoff from Sara Lee. And the way they extracted value from that is they loaded that up with debt, and Sara Lee got to get a dividend out of it. NACCO got a small dividend from Hamilton Beach, like $35 million or something.
Uh-huh.
They also collected dividends from them throughout the year up to it too. So that's one where, I mean, they didn't load it up with debt though. It's not like Hamilton Beach is a heavily leveraged company, but that is something that they do. So sometimes spinoffs are highly leveraged. If they're cash generative stuff like Hanes Brands, as an example, or Cars.com, it's fine. It's not a problem.
I mean, Cars.com, their ongoing costs are virtually like nothing, right?
Yeah, but I'd be really careful with companies like you don't want a spinoff of capital intensive sort of thing. I saw there's a spinoff of a company where it was offshore rigs. Okay, for oil, and that sort of thing is risky. Because, especially if it has debt on it.
That whole industry hasn't been good, right? The past 4 or 5 years,
But I just mean to be careful when you see a spinoff like that. There's not a lot of history on it.
Mm-hmm.
It maybe hasn't been through a whole cycle.
Yeah.
And you want to be very careful about sort of cyclical spinoffs, I'd say.
Sure.
And some spinoffs I think they overload with debt.
Mm-hmm.
That is true. And so you want to be a little bit careful about that. We mentioned Cars.com, which was heavily loaded with debt. Hanes Brands was heavily loaded with debt. That doesn't mean that they perform badly.
Cars.com's been written up too on the website. I remember I did a couple little paragraphs about it, but I think somebody else also wrote up about it as well.
Yeah, and that's an interesting one. It's been a while since the spinoff. That didn't perform really well as a spinoff right away, right?
No, I forget where it spun, but I know for the months prior to it, it was falling, and then I think when Starboard took a position in it, the stock kind of shot up.
Yeah, whereas
to like 30 something, and I remember I told myself I would be interested in, I'd reevaluate it back at $20 a share. I think it got to like 22 or 23. So they're again anchoring to a price, and but I think it's above 30 now.
Yeah, I don't think anything happened immediately with Hanes Brands, which was maybe fall of 2006 it was spun off. I don't remember anything immediately happening, like the price taking off. I do, however, remember with BWX Technologies that it was like someone fired off a gun. From not long after it was spun off, that the coal business was separated out from the nuclear business. The nuclear business went up in a straight line for the next few years.
Yeah.
So that can happen. And then, especially when you talk about anchoring, if you didn't buy in the first place and then it never comes back down anywhere close to your price, then you can miss out on it. Sure.
That's why investing's so hard, or like the art form, because sometimes it's just like you could be a pro and still kind of miss out on certain situations, or you still fall a victim to biases and all that sort of stuff. But I guess that's just what keeps it interesting.
Yeah, and I think spinoffs anchoring could be a particularly bad problem because you can see the exact price it's spun off at.
Yeah.
I bought NACCO at a price way higher than where it was that morning.
Yeah.
Talk about a strange spinoff thing there.
Yeah.
Right? There were shares that traded at in the 20s.
It's $20 per share, around there. Yeah.
Okay, and then I bought it that same day at 32 to 33.
Yeah, that was wild.
So that gives you an idea of what can happen with a spinoff that wouldn't happen.
And you bought it pretty much at the open too, right?
I bought it the same day, but a few hours later. Yeah. So I don't remember if, so it might have been 2 or 3 hours later.
Mm-hmm.
So that's a big difference there. That one was weird. I actually feel that some people may have, this is a weird thing to say, but I really do feel this is true. So Hamilton Beach Brands, there's A and B class shares in NACCO. Hamilton Beach Brands, when it was spun off, whether you had A or B in NACCO, you were getting 1A and 1B. And I do honestly feel that some people may have misread it and thought if you had B, you would get 1B share. If you had A, you would get 1A share. And so they may have been confused at the moment of the spinoff as to how many shares were outstanding of Hamilton Beach Brands, and then trying to work back from that to how much should be taken off NACCO and everything.
Sure.
That's a very strange thing to say, but I really do believe that in those first few hours, something like that was happening, that people were actually confused about how many shares were going to be outstanding.
Yeah.
That one, the company didn't do a lot of explaining how the spinoff would go, and they did the spinoff pretty quickly.
Yeah.
There's some where especially with bigger companies, there's a lot of presentations about it.
Sure.
You do often get a presentation when there's a spinoff that looks a lot like an IPO that way, that you get like
a roadshow.
Yeah, like a roadshow, yeah.
Yeah, that's definitely interesting. And I think it's a good place for people to, even if you don't need to say I'm going to be 100% in spin-offs, but I think it's a good place, a good complement to whatever it is that you're doing.
There's nothing wrong with reading every spin-off. There's not that many of them.
Sure.
So it's a good one to.
But the best part I like about it is that you don't know what the market price. There's no. You're kind of giving your own judgment to it. There's no current market price for it.
And there can be very strange spin-offs. I think we talked off air about IDT doing a spinoff that was a real hodgepodge of assets. A headquarters building, some investments in some things, some rights in some drug-related things. And so there can be mispricings and stuff like that.
Yeah.
Yeah. The odder the asset, the more likely it is that there'll be a mispricing. I feel
the more complicated the situation as well.
Yeah, that can be true too. Although, the spinoff itself is simplifying the situation for you. So a lot of times looking at it ahead of time, it looks more complicated and trying to come up with the sum of the parts, The other thing is come up with a value for each of the parts before it's spun off, and then you can pick which one you want. Yeah. And some people are smarter than me, like with NACCO, were very effective in trading it. They bought ahead of time. Then when the spinoff happened, they would sell some of one, buy some of the other, when it would move that way, if it was spun off at a price that they didn't expect. So they could make money on both sides of it. So I think that that's a very smart way of doing it. You sort of have even more chances to... You get 2 chances for just analyzing one company.
Yeah. Cool. Any other thing to add?
Nope. But I do think that spinoffs are one of the 2 areas that are most attractive, which is one, super illiquid stocks and spinoffs. Those are the 2 that... When people ask me, those are the 2 that I would definitely focus on, are really, truly illiquid and spinoffs.
What do you define as illiquid?
Illiquid,
like taking a couple, because I know you've owned some pretty illiquid stocks.
I've owned stocks that don't trade some days.
Yeah.
I'm looking at stock right now that doesn't trade some days.
Do you want to tell the viewers?
I don't want to tell the viewers what it is, because that one could take me a really long time to get.
Yeah, of course.
But I look at it and I say, well, I look at it by month.
Does that ever make you nervous? No. Because you just... to a lot of people... Well, of course, take money managers out of it that could not own it because of restrictions. A lot of people, I feel like, would kind of be fearful of that, not being able to, get out in one trade or whatever without driving the price up.
But WPP, one of the biggest ad agency holding companies in the world, reported results that weren't so good. Okay. They were maybe said their guidance was like, we'll be down 3% next year instead of up 3%, something like that along those lines, right? That stock dropped, I think, at the open about 20%.
Wow.
So what good liquidity do you have?
Yeah. That's a good point. Yeah. Yeah.
So, I mean, it depends on the asset. Would I be really scared of owning something illiquid that I want to trade? Mm-hmm. Yes. Sure. You need to be aware of what the underlying return in it is in terms of being able to get out of it. Mm-hmm. But the weird thing is that illiquid stocks trade often at values that are lower than what the private owner value of it would be.
Yeah, I mean, you sort of pay up for liquidity in a way.
Yeah, but what's bizarre about that is at like a private business is completely illiquid.
Yeah, sure.
Right? But I've seen businesses that because they're a stock that's highly illiquid, they actually can trade at a value that's lower than an entire business. Mm-hmm. And an entire business is always more illiquid than a stock.
Interesting.
Right? But people think of stocks as that's why it relates to like spinoffs that way. There's spinoffs, mergers, things like that. Mm-hmm. Like analysts will drop coverage of it.
Yeah.
Oh, this is happening now. Well, it's not a normal stock now. I'm not covering it.
Sure.
Well,
that's adds to the potential mispricing as well.
Yeah, absolutely.
Yeah. So that's why I think it's good for individual investors or, everybody listening to this podcast that wants to find mispricings. That's probably just why it's such a good place to look.
Yeah. If you don't know what 10K is to read, don't read 10Ks. Instead, read the spinoff document.
Yeah.
And do that for each of the ones.
And where can you get that?
You can get that at Edgar.
Mm-hmm.
So you can look it up there. It's easy. You just need to know the name of the company, and you can type it in.
Mm-hmm. I think Spinoff Monitor is a good place to start, where you could get a bunch
find each of the spinoffs.
Yeah, I think they tell all the past ones. So, like I said, sometimes opportunities are best even a year afterwards. And so you could go through all the ones that have happened for the past year, and even if the stocks have fallen or whatever. It's actually stockspinoffs.com. That's the good one. And then if you go to stock spinoffs, and then they have a page, recent spinoffs and upcoming spinoffs. They have just a bunch of different information. Like I'm just looking for upcoming spinoffs. March 5th, IDT, they're spinning off a real estate company, RFL, and it's a good source to.
That's one I was mentioning. It's very strange assets that it has.
Yeah.
IDT's continually been spinning stuff off. Mm-hmm. That's another thing is that once a company starts spinning stuff off, sometimes it keeps happening. So it's nice to follow a situation where they're sort of breaking the company up.
Yeah.
I mentioned Babcock and Wilcox. I believe McDermott had to spin off Babcock maybe 5 years before or something because of a legal issue. They couldn't move to another country for tax purposes and still do business with the U.S. government. I think that's what the deal was. So they had to spin off Babcock, and then only 5 years later they were spinning off again. Mm-hmm. And we mentioned Gannett spin off and followed it like a year later or something by another spinoff.
Yeah.
So it's an IDT has spun off. This might be its fourth spinoff or something. I wouldn't be surprised if it is.
Yeah.
So companies that are sort of breaking up over time are attractive that way.
Yeah. Yeah. So I think it's definitely a good place for people to certainly learn more about. You could download the book or go purchase it. You can be a stock market genius.
Definitely read that book.
I think it's, like I said, it's one of the best books out there. I mean, Joel Greenblatt, his returns are pretty good, and he's a great investor. And I've also talked about it. If you can, Google Joel Greenblatt Columbia Class Notes or something like that. I've also tweeted it out a couple of times. If you don't have that, reach out to me, and I could certainly get that to you. It's like 400 pages. I think it was like 6 years or 8 years just of audited class notes, and it's all on. It's a special situation class, so it's all on all sorts of things like that we've been talking about. So it's certainly a great place to learn. Mm-hmm. Anything else to add on spinoffs?
Nope, that's it. Except I would say read a blog that has to do with special situations. So like I said, I think Clark Street Value.
Yeah, he's pretty good.
The NACO one, that's a good one to read.
Yeah.
And look for other ones like
that's all he does too, I think, isn't it?
Special situations, yeah.
Yeah.
Yeah, all sorts of different kinds of special situations. But
yeah. So and he's pretty good at breaking them down and giving this a good highlight of everything. If anything, it's a really good place to start for yourself.
Yeah, and read the comments section because like that blog has some really good readers too. So some blogs have very high quality readers. That's a good example.
Yeah. Cool. Well, we want to thank everybody for tuning in to the podcast today. Be sure to go to www.focuscompounding.com and sign up using the word podcast as the promo code to get $10 off your monthly subscription price forever. Focus Compounding is where we write about all sort of topics investing related, and our members ourselves write about ideas as well, which is pretty cool. So you can interact with other people. So
I'm sure if CAR, KAR,
KAR
does carry a spinoff in the next year, we'll write about it.
You know what's funny is I actually have their 10K in my backpack.
Okay.
Right now, KAR, because I've been following the situation.
That's one where I'm sure that there'll be at least one write up and probably more on the website eventually. Yeah,
definitely.
That's
so be sure to subscribe or join our website, right?
Yeah.
There's a sales pitch for you.
Okay.
So, all right, everybody. Thank you very much for listening, and we'll see you in the next podcast. Jeff, get home safe.